In this video, traders are going to ask the question, is a noisy stochastic, like a 2-period stochastic, useless? I don't think it is. Stay tuned. Hey guys, warm welcome to you. Alright, so a lot of people think that if you have a indicator on a very low setting, like a 2, a 3, a 4, even a 5, like a moving average on a 5, I've done a video about that, go and check that out, 5-period SMA, the usefulness of that. Is it useful? Because people are saying it's so too noisy. I disagree. I think that especially for a day trader or a 2 or 3 day swing trader, let's say, okay, if you're trading for a few quarters at a time, maybe. But if you're not, then a low period stochastic or a low period RSI or something rate of change can be very, very effective. In this video, I want to talk about a stochastic on a 2-period setting. Look at the settings in a moment on the screen, and how, yes, maybe it's not giving you beautiful signals, but it's actually pretty good, and it's pretty good as a guide on a variety of markets. And it's something that you don't expect because you think it's just going to be full of noise. But in actual fact, until you investigate these things for yourself, guys, you don't know. You might find something that's really, really useful for guiding your trading. Again, like I say, specifically if you're looking for like a 1-day move, 2 or 3 day move, this is a perfect scenario. I know a lot of you guys out there, whatever you're trading, currencies, commodities, indices, etc., are looking for that. So let's hop to the screen now. Let's check it out and let's have a look at that 2-period stochastic. All right, so I have a stochastic here. The percentage K is on 2, D's on 3, smooth's on 3. Well, I don't want daily chart, but what I want to point out, guys, is that people think, oh, it's too noisy, it's all over the place, you can't trade it. I beg to differ. I'm going to put up some different charts. Let's start off with crude oil because I happen to have it here, and see how well it does at showing you those pause points, those 1 or 2 day counter trend moves, or even the big turns. Now, does it capture massive turns all the time? No, it doesn't. Is it going to give you a lot of signals? Yes, it is, because it's a low number. However, it can help you take profits, help you grab a little bit of counter trend move, help you just stay in the ebbs and flows of the market without forcing what you expect to happen onto the market and stop you chasing stuff. So look, for example, here, let's start it from here. Let's give it a little bit of a handicap and start. Let's not give it the best one first. Let's start from here. So we go overbought. As we come off the overbought setting, which I've got actually, by the way, guys, at 80 and 20, for those of you interested. As we come off here, look, we have a 2-day down move. Does it start of a really hammering reversal? No, it's not. But it's enough to capture a 2-day move if you're trading that as a fake out here. It's enough to take profits on your long. It's something. Then we go again. As we start to curl down from the overbought condition, we have a 2-day down move. As we start to curl down from the overbought condition, we have a one down day, one up day, one down day. This is all in an uptrend as well. So I know that very often we talk about using an oscillator against the trend, i.e. we look for the first oversold condition on a larger oscillator, and that's very much a good strategy to have. A larger oscillator or higher time frame oscillator or higher number oscillator, however you put it, that's good for finding that first counter trend move. But this is good for spotting these kind of highs, just extremes that are a little bit stretched, seeing when that spring stretched. Here, even though it's backed off and yes, didn't work that often, we're getting a little bit of a pause. We're getting a little bit of a red day. Same here, a little bit of a pause. Now, I'm not saying you're going to go short here, but it's useful this to see when the market's taking a breather. Maybe you're going to initiate a long after you've had a couple of down days. Maybe you want to take some profits on your long. Maybe you want to snatch a little intraday short, which there's a couple of days of short opportunity there, and that's fine. Whatever you want to do. Again, even on the downside, as we're starting to come off the oversold, have a couple of days of up move, etc., etc., etc. And I'm going to try something else now as well, guys, another chart. But the point is, I think it's super useful. I really do. I know people are. Let's go 24-hour Dow. It's just super useful to see what's going on as we're coming off that overbought condition. Bit of a pause. As we're coming off the overbought condition again, a bit of a pause. As we're coming off the oversold condition, a bit of a kind of change in the sentiment, a bit of a change in move. Very, very useful. Let's go into currencies. I know a lot of currency traders are viewers. Let's go on Euro US dollar. Euro US dollar again. Now, maybe I'm giving this a little bit of too much help here because Euro US dollar has very much been a range bound condition. But still, we know it's going to work in a range of conditions. No surprise to us. But you know, again, it's very useful. Even if you use it as a filter and said, hey, you know what? I'm not going to buy my overbought condition. I'm just not going to buy. I'm only going to buy in oversold. I'm only going to buy when we come off overbought. So it's just a useful tool, guys. One more thing. Let's go into gold, because I know gold's quite interesting at the moment. And we get these pauses as we come off overbought here. We get a little bit of a pause. Yeah, it's a little bit late, and to be fair, that's not great. But you know, I'm expecting it to be right all the time. But even on this big extension here, as we come off that overbought condition, it starts to just unwind a little bit. As we start to come off the oversold condition, it starts to just unwind. Anyway, I could go on forever. The point is, guys, is that don't override, or don't write off, is probably a better way of saying it, the point is, guys, don't write off a noisy indicator. Yes, is it going to capture the big moves? It's not. But if you are aligned with that 1, 2 day, 3 day, as I mentioned, type of trade, or even intraday trade, and you want to align yourself with the trend of the day, then this might be a useful tool. And stochastic might not be the one for you. It might be RSI, might be CCI, etc. But looking to see how these oscillate and move can help you out, can see where the spring's a little bit stretched and guide you. And many people don't want to use these. Many people think this is too noisy, but I beg to differ. And just by literally just throwing up a chart for a few minutes, I think you'll agree as well that there is something there that might be interesting if you're trading in that time frame. Let me know your thoughts, guys, in the comment section below. Is it something you might want to take away in your trading? Is it something that you're not that interested in? You think it's that useful? Any other tweaks and settings that perhaps you'd add to that? Let me know. Always interested to hear your thoughts. All right, guys, see you next one. Take care. Bye-bye.